remittances, real estate services, pensions management, investment services, business and corporate solutions, savings and loans. We are a strong, integrated group because you, our members, are strong. You are written in our story. That's what makes us a mutual. VM. We know how important your dreams are to you, and we will continue to stand with you. First steps, first loves, first jobs. We know that this might be new, but our commitment to you remains the same. When you grow, we grow. VM Group.
Transform your everyday.
Welcome to VM Wealth Client Portal. Here's how it works. Step 1. Navigate to the VMWM Client Portal registration page and select Register Here to begin the process. Step 2. Complete the registration by entering the relevant information in the fields requested. Step 3. Once the relevant fields have been completed, review and accept terms and conditions. Select the Register button to submit the information entered. An email will be sent to the indemnified email address on file at VM Wealth. Step 4. Access email and retrieve the email vmwealth-no-reply at myvmgroup.com to verify the email address and complete the registration process. Step 5. Click on the link in the email to validate your email address. The client will be redirected to the VM Wealth Client Portal. Step 6. Click on Back to sign in to gain access to the portal. Register now.
VM. Our journey is the journey of our people. We've come a long way together. Our wins are our people's wins. Our change is our people's change. Our moves are your moves. Together we have transformed fears into dreams, dreams into houses, houses into homes, homes into memories. We are in the business of possibilities and know-how. From remittances, real estate services, pensions management, investment services, business and corporate solutions, savings and loans. We are a strong, integrated group because you, our members, are strong. You are written in our story. That's what makes us a mutual. VM. We know how important your dreams are to you, and we will continue to stand with you. First steps, first loves, first jobs. We know that this might be new, but our commitment to you remains the same. When you grow, we grow. VM Group.
Transform your everyday.
Welcome to VM Wealth Client Portal. Here's how it works. Step 1. Navigate to the VMWM Client Portal registration page and select Register Here to begin the process. Step 2. Complete the registration by entering the relevant information in the fields requested. Step 3. Once the relevant fields have been completed, review and accept terms and conditions. Select the Register button to submit the information entered. An email will be sent to the indemnified email address on file at VM Wealth. Step 4. Access email and retrieve the email vmwealth-no-reply at myvmgroup.com to verify the email address and complete the registration process. Step 5. Click on the link in the email to validate your email address. The client will be redirected to the VM Wealth Client Portal. Step 6. Click on Back to sign in to gain access to the portal. Register now.
VM. Our journey is the journey of our people. We've come a long way together. Our wins are our people's wins. Our change is our people's change. Our moves are your moves. Together we have transformed fears into dreams, dreams into houses, houses into homes, homes into memories. We are in the business of possibilities and know-how. From remittances, real estate services, pensions management, investment services, business and corporate solutions, savings and loans. We are a strong, integrated group because you, our members, are strong. You are written in our story. That's what makes us a mutual. VM. We know how important your dreams are to you, and we will continue to stand with you. First steps, first loves, first jobs. We know that this might be new, but our commitment to you remains the same. When you grow, we grow. VM Group.
Transform your everyday.
Welcome to VM Wealth Client Portal. Here's how it works. Step 1. Navigate to the VMWM Client Portal registration page and select Register Here to begin the process. Step 2. Complete the registration by entering the relevant information in the fields requested. Step 3. Once the relevant fields have been completed, review and accept terms and conditions. Select the Register button to submit the information entered. An email will be sent to the indemnified email address on file at VMWealth. Step 4. Access email and retrieve the email vmwealth-no-reply at myvmgroup.com to verify the email address and complete the registration process. Step 5. Click on the link in the email to validate your email address. The client will be redirected to the VMwealth client portal. Step 6. Click on Back to sign in to gain access to the portal. Register now.
But I'm seeing the results, man. I'm seeing more and more pictures emerging. It's terrible.
Yeah, it has been. We have a place in Manchester.
VM, our journey is the journey of our people. We've come a long way together. Our wins are our people's wins. Our change is our people's change. Our moves are your moves. Together we have transformed fears into dreams, dreams into houses, houses into homes, homes into memories. We are in the business of possibilities and know-how. From remittances, real estate services, pensions management, investment services, business and corporate solutions, savings and loans. We are a strong, integrated group because you, our members, are strong. You are written in our story. That's what makes us a mutual. VM. We know how important your dreams are to you, and we will continue to stand with you. First steps, first loves, first jobs. We know that this might be new, but our commitment to you remains the same. When you grow, we grow. VM Group.
Transform your everyday.
Joanna Banks is here. Because, you know, we send me pictures whenever I'm at a match, I send her pictures. Okay. Yeah, man. Big cricket player. So she was done. Okay, it's Clover. Thank you. Yes. Clover is killing us. Yeah, man, she was in Barbados. She was in Barbados? Yeah, she was. Well, she's serious about it. Well, her mother is Bayesian. Her mother is Bayesian. So. Good afternoon, everyone. My name is Michael McMorris, Chairman of VM Investments Limited and VM Group Limited. And it is my pleasure to welcome you all to the 7th Public Annual General Meeting of Victoria Mutual, VM Investments Limited. I get fined every time I say Victoria Mutual, so. But VM Investments Limited. And I would like to invite trader at VMIL, Mr. Blair, to lead us in prayer.
Thank you, Sir Chair. So before coming up, you know, I see a lot of persons with a little fancy microphone. I was wondering if I had to adjust my mic, but it's working perfectly fine, so I'm very grateful for that. All right, let us pray. Dear Lord and Heavenly Father, we give thee thanks that we can be here gathered once again as a team, as a group, as, you know, movers rather and shakers of the society, of the region, and of the world. Because truly, when one thinks of VM, one thinks of a company that looks out for their members, internally and externally. And we give thee thanks, dear Lord Jesus, that we see it fit to have you first before everything else. And we truly give thee thanks that it's still a pivotal aspect of every meeting that we seek to do. And truly, dear Lord Jesus, as we are about to go into this meeting, we're just asking that you will continue to lead and direct everything, that you will continue to bless us, keep us, and guide us. Dear Lord Jesus, even with the recent passing of a hurricane, that truly we're still able to have this meeting, and it's because truly VM has a purpose. VMIL will continue to push from strength to strength as we continue to build on achievements, as we continue to build on the efforts of our clients, so that all our clients will be able to benefit from something that they've never seen before. And truly that this 7th annual meeting will be one to remember, one that all clients will be fully engaged with, and that truly, dear Lord, that we will come to an end where everyone's questions would have been answered, and that we'll be able to see something good of it. So as we continue to look to you, dear Lord Jesus, we leave all things in your hands, and we say thanks as well. In your Son's name we pray. Amen.
Thank you, Sion. Let us officially begin this afternoon's proceedings by moving a motion for the notice of the meeting to be taken as read. Could I have a motion? Yes, sir. Mr. Bloomfield, thank you. Second? Thank you, sir. Mr. Staple? So all in favor? Any against? Any abstentions? As we begin this 7th public AGM, I offer a warm welcome to everyone who has joined us today. We look forward to engaging with you as we discuss affairs of VMIL. On stage, we have Mr. Courtney Campbell, President and CEO of the VM Group, over my right shoulder. Mr. Resworth Burchinson, CEO of VMIL and VM Wealth Management Limited, over my left shoulder. And Mrs. Janice McKinley, VM Group Chief Financial Officer, over Rez's shoulder. We also have other VMIL and VM Wealth and VM Group leaders with us, and our Board of Directors have joined us both here in the room and also virtually. So welcome to you all. For those joining via private live stream, the mechanisms are in place for you to participate fully. As usual, you will be asked to vote at the appropriate time. Online voters will receive a prompt when voting is required and will cast votes by the online poll. The matters on which you will be asked to vote will be populated in the chat section of the screen. Scroll down and join as a guest. You will be required to state your name and select your voting option. And I hope that goes smoothly. The first item on the agenda is the presentation of the Auditor's Report and Statement of Accounts for the year ended 31 December 2023, as well as the Director's Report. Mr. Damian Reid of KPMG, Auditors for VM Investments, will now come forward and present the Auditor's Report and Statement of Account. Damian.
Thanks, Mr. Chairman. Good afternoon, everyone. So my responsibilities, as the chairman mentioned, is to present the auditor's report. I'll just start by summarizing the auditor's report, just for the benefit of the shareholders, is that our audit report comprises a report on the financial statements and also report on additional matters as required by the Jamaica Companies Act. It's a bit lengthy, so I ask you to bear with me as I get through this. Independent Auditor's Report. To the members of VM Investments Limited, Auditor's Report on the financial statements. Opinion. We have audited the financial statements of VM Investments Limited, the company, comprising the separate financial statements of the company and the consolidated financial statements of the company and its subsidiary, the group, as set out on pages 101 to 184, which comprises the group's and company's statements of financial position as at December 31st, the group's and company's income statements, statements of comprehensive income, changes in equity and cash flows for the year then ended, and notes comprising material accounting policies and other explanatory information. In our opinion, the accompanying financial statements give a true and fair view of the financial position of the group and the company as at December 31st, 2023, and of the group's and the company's financial performance and cash flow for the year then ended in accordance with IFRS accounting standards as issued by the International Accounting Standards Board, IFRS Accounting Standards, and the Jamaican Companies Act. Basis for opinion. We conducted our audit in accordance with the International Standards on Auditing, ISAs. Our responsibility under those standards are further described in the auditor's responsibility for the audit of the financial statement section of our report. We are independent of the company in accordance with the International Ethics Standards Board for accountants, International Code of Ethics for professional accountants, including International Independent Standards, ISBA code. We have fulfilled our ethical responsibilities in accordance with the ISBA code. We believe that the audit evidence we have obtained is sufficient and appropriate to provide a basis for our opinion. Emphasis of matter. We draw attention to note 35 of the financial statement which indicates that the comparative information presented for the financial year as at and for the year ended December 31st, 2022 has been restated. Our opinion is not modified in respect of this matter. We draw attention to note 17I of the consolidated financial statement, which describes that the group breached the return on asset ratio and the interest cover ratio for the fixed and variable corporate bonds in issue, resulting in the outstanding bonds becoming payable immediately. Subsequent to the reporting date, the group was able to attain the minimum requirements for the financial covenants, and immediate repayment is no longer required. Our opinion is not modified in respect of this matter. Key audit matters. Key audit matters are those matters that, in our professional judgment, were of most significance in our audit of the financial statements for the current year. These matters were addressed in the context of our audit of the financial statements as a whole and informing our opinion thereon. We do not provide a separate opinion on these matters. 1. Fair value of level 3 instruments. Key audit matter. A significant portion of the group's and company's investments are classified as level 3 measurements. These investment securities measured at fair value are instruments for which quoted prices are not available. Valuation of these instruments uses unobservable inputs which require significant estimation uncertainties. Our audit approach in this area included the following: assessing the reasonableness of the significant assumptions and suitability of the valuation models used by the group and the company, involving our valuation specialists to determine or obtain yield or price of specific securities and comparing these yields or prices to those used by the group. Assessing the adequacy of the disclosure, including the degree of estimation uncertainty involved in determining fair values. 2. Investment in associate. The determination of the final fair value of the net asset acquired in Kingston Properties Limited, the investee, for which the group and the company holds 23%, involves some judgment. During the year, the carrying value was remeasured, and consequently, the provisional values previously reported were updated. there is a risk that the values as determined in the purchase price allocation may not be appropriate or impaired. Our audit procedure in this area included the following. Involve our valuation specialists in evaluating the group's purchase price allocation in the investee and impairment assessment, including assessing the appropriateness of the assumption and methodology used. Comparing the group's assumptions to external derived data, as well as our assessment of key inputs such as discount rate. Assess the adequacy of the disclosure, including the remeasurement of the carrying value of investments. Other information. Management is responsible for other information. Other information comprises information included in the annual report, but does not include the financial statements and or auditor's report thereon. The annual report is expected to be made available to us after the date of this auditor's report. Our opinion on the financial statements does not cover the other information, as we will not express any form of assurance conclusion thereon. In connection with our audit of the financial statements, our responsibility is to read the other information identified above when it becomes available, and in doing so, consider whether the other information is materially inconsistent with the financial statements or our knowledge obtained in the audit or otherwise appears to be materially misstated. When we read the annual report, if we conclude that there is a material misstatement therein, we are required to communicate the matters to those charged with governance. Responsibilities of management and those charged with governance for the financial statements. Management is responsible for the preparation and fair presentation of the financial statements that give a true and fair view in accordance with IFRS accounting standards and the Jamaican Companies Act, and for such internal control as management determine is necessary to enable the preparation of the financial statements that are free from material misstatements, whether due to fraud or error. In preparing the financial statements, management is responsible for assessing the company's ability to continue as going concern, disclosing as applicable matters relating to going concern, and using the going concern basis of accounting, unless management either intends to liquidate the company or to cease operations, or has no realistic alternative but to do so. Those charged with governance are responsible for overseeing the company's financial reporting process. Auditor's responsibility for the audit of the financial statements. Our objectives are to obtain reasonable assurance about whether the financial statements as a whole are free from material misstatements, whether due to fraud or error, and to issue an auditor's report that includes our opinion. Reasonable assurance is a high level of assurance, but is not a guarantee that an audit conducted in accordance with ISAs will always detect a material misstatement when it exists. Misstatements can arise from fraud or error and are considered material if individually or in aggregate they could reasonably be expected to influence the economic decisions of the users taken on the basis of these financial statements. A further description of our responsibilities for the audit of the financial statements is included in the appendix to this auditor's report. This description, which is located at page 100, forms part of the auditor's report. I'll now turn to that section, and I'll come back to the second half of our auditor's report, page 100. Appendix to the independent auditor's report. As part of the audit in accordance with ISAs, we exercise professional judgment and maintain professional skepticism throughout the audit. We also identify and assess risk of material misstatements of the financial statements, whether due to fraud or error. Design and perform audit procedures responsive to those risks, and obtain audit evidence that is sufficient and appropriate to provide a basis for our opinion. The risk of not detecting a material misstatement resulting from fraud is higher than one resulting from error, as fraud may involve collusion, forgery, intentional omission, misrepresentation, or override of internal control. We also obtain an understanding of the internal control relevant to the audit in order to design audit procedures that are appropriate in the circumstances, but not for the purpose of expressing an opinion on the effectiveness of the company's and the group's internal control. We also evaluate the appropriateness of the accounting policies used and the reasonableness of the accounting estimates and related disclosure made by management. We also conclude on the appropriateness of management use of the going concern basis of accounting, and based on the audit evidence obtained, whether a material uncertainty exists related to evidence or condition that may cast significant doubt on the company's ability to continue as a going concern. If we conclude that a material uncertainty exists, we are required to draw attention in our auditor's report to the related disclosure in the financial statements, or if such disclosures are inadequate, to modify our opinion. Our conclusions are based on the audit evidence obtained up to the date of our auditor's report. However, future evidence or condition may cause the company to cease to continue as a going concern. We also evaluate the overall presentation, structure, and content of the financial statements, including disclosures, and whether the financial statements represent the underlying transactions and events in a manner that achieve fair presentation. We also obtain sufficient appropriate audit evidence regarding the financial statements of the entities and business activities within the group to express an opinion on the financial statements. We are responsible for the direction, supervision, and performance of the group audit. We remain solely responsible for our audit opinion. We communicate with those charged with governance regarding, among other matters, the planned scope and timing of the audit and significant audit findings, including any significant deficiencies in internal control that identified during our audit. We also provide those charged with governance with a statement that we have complied with the relevant ethical requirements regarding independence and communicate with them all relationships and other matters that may reasonably be thought to bear on our independence, and where applicable, action taken to eliminate threats or safeguards applied. For the matters communicated with those charged with governance, we determined those matters that were of most significance in the audit of the financial statements of the current period and are therefore the key audit matters. We describe these matters in our auditor's report unless law or regulation preclude public disclosure about the matters, or when in extremely rare circumstances, we determine that the matter should not be communicated in our auditor's report because the adverse consequence of doing so would reasonably be expected to outweigh the public interest benefit of such communication. I'll now turn back to page 99. Report on additional matters as required by the Jamaican Companies Act. We have obtained all the information and explanations which, to the best of our knowledge and belief, were necessary for the purpose of our audit. In our opinion, proper accounting records have been maintained so far as appears from our examination of those records, and the financial statements, which are in agreement therewith, gives the information required by the Jamaican Companies Act in the manner required. The engagement partner on the audit resulting in this independent auditor's report is Damian Reed, KPMG, Chartered Accountant, Kingston, Jamaica, May 20, 2024. Thank you. Chair.
Thank you, Damian, for that complete and comprehensive report, as always. I will now present the chairman's message as documented in the annual report. In a year marked by continued economic uncertainty, the VM Investments team remained committed to purposely executing the entity's robust strategic plan and made commendable progress in growing and fortifying the business. In 2023, VM Financial Group was incorporated as part of the historic reorganization of Victoria Mutual and became the financial holding company of VM Investments Limited and all other financial businesses of VM Group Limited. This change, which our shareholders overwhelmingly approved in 2022, has put VM Investments and all other VM Group subsidiaries in a better position to actively pursue growth opportunities. History will therefore record 2023 as a pivotal year for many great successes which are to come. At the national level, VM Investments and other financial institutions in the sector contended with stubborn inflationary pressures, including sustained high interest rates and the related malaise in the local stock market. The performance of other industries was varied, with tourism and mining emerging as frontrunners for the year, while construction lagged with a decline in output of 4.8% by the fourth quarter. Additionally, the Jamaican dollar closed the year with a year-over-year depreciation of 1.87% relative to the US dollar. Concurrently, the broad economy displayed noticeably positive trends in some key economic indicators, including gross domestic product, estimated annual growth rate of 2.6%, international reserves, which closed at a record high of $4.75 billion at the end of 2023, and the unemployment rate, down from 6.28% in 2022 to 4.38% by October 2023. The economic metrics in the other territories in which VM Group operates, namely Barbados, United Kingdom, and the United States of America, painted a similar picture of uneven performance outcomes with sustained high inflation and interest rates. Bolstered by VMIL's new position within the restructured VM Group, yet tempered by the realities of a difficult economic climate, VM Investments was able to maintain forward momentum, but at a pace commensurate with the industry-wide slowdown. Overall, profits attributable to shareholders decelerated to $199 million, or 13 cents per share, from $716 million, or 48 cents per share in 2022. There were, however, some encouraging indicators. Interest income grew by 7.8%, moving from $1.4 billion in 2022 to $1.5 billion. And total assets increased by 1.95%, or from $28.91 billion in 2022 to $29.50 billion in 2023. Capital to total assets of 13.73%, a capital adequacy ratio of 27.53 was recorded, as well as an enterprise risk management score of 85% was another highlight. These results were realized through prudent, real-time reviews and interventions to our tactical agenda. We commend the VM Investments leadership and team for their sound and thoughtful approach to the task at hand. Another noteworthy event that occurred in 2023 was the VM Investments reception of a further endorsement from CARICRIS, the premier regional financial rating agency, which upgraded the business's credit rating to CARI BBB. Another item was VM Financial Group successfully raising $11 billion, of which VM Wealth Management received a capital injection of $1.5 billion to further bolster its growth-focused activities. VM Wealth also made significant progress in completing its acquisition of RFI funds in Barbados and expects to be operational in another Caribbean country for the first time ever in Q1 2024. VM Investments was shortlisted for the Jamaica Stock Exchange's Best Practice of Corporate Governance Award. The company also received second runner-up awards in Member Dealers Expansion of Investors and Listed Companies Base category at the awards. These recognitions highlight success in bringing new investors into the market and attracting companies to list, including the historic Dollar Financial Services Limited initial public offering and the Kingston Properties Limited, KP REIT, additional public offering. We expect to use these awards as a springboard for continuous improvement, solidifying VM Investments' position as a sector leader committed to responsible wealth management and ultimately sustainable success. Ultimately, the outcomes in 2023, while far from ideal, demonstrate the resilient nature of VM Investments' strategic plan, as well as the commitment of the directors, leadership, and team members to ensuring the best business results possible in bad as well as good times. In 2024, as determined by the board of directors, the activities of VMIL will focus heavily on retrenchment, diversifying and growing revenue sources, and the introduction of more self-service options for our clients as requested. We expect that the progress achieved in 2023 will continue to set a firm grounding for our future success and the achievement of our objective to consistently exceed our clients' shareholders' expectations. VM Investments Limited's directors are grateful to the dedicated leaders and team members of the business for their purposeful work in guiding and empowering clients to achieve transformation. We also offer our sincere thanks to our clients and shareholders for their trust and loyalty. We are pleased to be your partner of choice to create, grow, and sustain your wealth. Thank you. Yes. Okay. So with that, we will now hear from Rez Roach-Burgerson, the CEO of VM Investments, who will be joined by Brian Fraser, Deputy CEO, and Alison Mays, VP of Operations. Rez?
The clap come at the end or the clap come at the beginning, Chairman? At the end? Okay. Oh, okay. Is that a new resolution? I think you need to give 21 days notice for that one. Good afternoon, one and all. Good afternoon, one and all. Okay, firstly, let me thank all the shareholders for being in attendance. I know we had a hiccup last week, but I think we're still standing, and notwithstanding the challenges being faced in Western Jamaica, I think that it could have been a lot worse, but certainly our hearts and hands go to persons in Western Jamaica, and the VM Group will also play a role in ensuring that those persons get back to some more normalcy as soon as possible. So welcome to all our shareholders, welcome to all our stakeholders. Number of stakeholders could be our rating agencies, it could be our regulators, it could be members of the media, it could be members of the analyst community, it could be members of the competition, and it could also be admirers of VMIL. I want to thank, on behalf of my team, the chairman of VMIL for the support provided to myself and the leadership team during a very interesting 2023. Also express appreciation to the VMIL directors. Also want to express appreciation to the VMG directors, because we rely quite a bit on other governance authorities across the group. I want to thank the executives of the group, whether they are other similar chief executives or vice presidents across the group. I want to thank all staff members, VMG, but I have to big up my VMIL team that we survived a very tough 2023. So welcome to the 7th Annual General Meeting. I'm going to take you through, and just like last year, just to show the depth of the talent, I'm going to be supported by Brian, no longer newly minted Deputy CEO, but we acquired an awesome talent last year, Alison Mays, who is going to be on the show. Alison, you ready? Pressure. To take us through her area of influence. So the discussion points: who are we? The economic landscape. Some thoughts on strategic execution, and then Brian will take us through the financial performance, and Alison will touch on the corporate governance segment. Okay, it's important to stop and remind all stakeholders, including shareholders, what is it we're trying to build. We're trying to build a Caribbean-based institution which is focused on our members, wherever they are across the globe. But more than that, how do we take our members from point A in their financial standing to a much higher point, whether it be point B or point C? And that is what speaks to financial well-being. And as you know, previously, 2 years ago, I'd have said that there are 3 million Jamaicans in Jamaica, 3 million overseas. But I think I'm very proud to say that now we're now regional, and I'm quite sure that Sean and Leah from Barbados, they're looking on. I'm quite sure perhaps there are other Bajan mutual fund holders looking on. So no longer can I say that only focus on Jamaica, because we're now, quite rightfully so, a regional player. So what you see coming out in my presentation is that I want to focus on the word financial well-being. I'm going to make a couple presentations on some of my slides. So this is an overview of where VMIL is situated within the VM Group. We have the VM Group Limited. We have the VM Financial Group, which is regulated. Then we have VM Investments Limited, our wholly owned subsidiary and broker dealer, VM Wealth Management. We have VM Wealth Funds Barbados. And then we have our private equity and other equity investments, Coalbush, Home Choice, Kingston Properties, and Jasmith. So one of the things that we want to highlight in our presentation is certainly where we're going. How are we diversifying the revenue streams? How are we ensuring that we're providing self-serve to all our members? How are we accelerating the footprint from Barbados? How are we creating new markets in fund management, private equity, and alternative investments? Our private equity investments now is Home Choice. Would have seen from the Q1 release for 2024 that we divested our investment in Caroland. And I think a few years ago, would have gotten calls and questions at AGMs regarding Caroland. Caroland, as for all the members, certainly was a loss-making for quite some time. A number of us questioned the investment, but we stuck to it. And in 2024, we did realize some gain on that investment. That just speaks to the power of the potential of private equity and why we're investing in this business. So I know all my shareholders are quite versed in terms of what's happening on the economic landscape. What we have had is increasing inflation and increasing interest rates. And we all know that when there's an increase in interest rates, there's a slowdown in the overall economy. But more importantly, that red line that you see going up in terms of the BOJ policy rate is that as that goes up, asset prices fall. That's one. As that goes up, there's contraction in the overall economy. And why is it important to underscore is that all sectors of the economy would have been negatively impacted from the years of increasing interest rates, and our business was no different. Whether it be private equity, whether it be capital markets, whether it be asset management, we felt the brunt of that, of some of that increase in interest rates in 2023. Nonetheless, one thing that we'll talk about is how are we building a resilient business? How are we, notwithstanding the challenges of 2023, ensuring that we continue to make investments in where it does matter, whether it be in our self-serve platform and also our expansion thrust in Barbados and other areas. A global asset manager will always be concerned around a number of things. Market volatility, and we certainly saw that in 2020, 2023. Sustainability, there's lots of talk around climate-related risks, something that as a public company we are doing, but there's a lot more that we need to do. I mean, when you read the literature around burials, so early in the season, there's a lot more investments required to minimize climate-related risk. And in as much as it is a risk, it's also an opportunity, because there'll be lots of funding provided, so we need to ensure that we are some of the conduit, or the conduit, for some of that funding that will come to the Caribbean to mitigate some of those risks. We all know what's happening in AI. How are we as a business preparing for AI? Both the challenges, but also the opportunities. Regulatory risk management, lots of talk in 2023 regarding regulatory challenges or regulatory pronouncements. We all heard the Bank of Jamaica talk about the Twin Peaks model. That is coming. That certainly is coming. Client experience is fundamental to many of the things that we're doing. And we're going to talk about our client management system, which we have been speaking about for quite some time, and which we will continue to speak about for many years to come, because that is a key pillar of driving customer experience in the business. And then, of course, we want to talk about talent management, because talent is the secret sauce. Okay. So what were some of our achievements? We're going to speak about the overseas expansion. Why that's important? It's going to drive our revenue growth. Spoke about Barbados. It's going to widen our market scope. It's going to give us new clients. The acquisition of RFI in Barbados gave us $10 million US in AUM. Small, but better than nothing. It's a pillar that we're going to build on. It also gave us about 2,000 clients. Right? So obviously, we have to build on that. But also, how are we managing investment portfolios and doing M&A? Digitalization and automation, how are we exploiting digital technology? Again, we're going to speak about that. We're going to speak about our PE network, our PE initiative. Not many deals closed in 2023 on the buy side, but we certainly saw in 2024 on the sell side us exiting an investment and making some gains. Lots of brand awareness in the business, not as much as in previous years, primarily due to, I'd say, prudent cost management in 2023, but something that we have to refocus on and double down on in 2024 going forward. And always focusing on sales output. How are we as a business ensuring that the productivity of our sales team is always improving? So we spoke about the completion, the RFI acquisition that was completed in 2024. The acquisition increases Vmil market presence and gives us additional clients in the Caribbean. And the synergies is certainly leveraging our asset management platform. Simply put, in Kingston, we manage 9 portfolios. We have private managed funds. We have a system that does the accounting and the management for portfolios in a fairly robust way. Lots of work to be done there. We're kind of leveraging that competence with RFI. And then our client benefits is how we're giving access to clients in Barbados, opportunities in Jamaica, and vice versa. So we launched in this year Vmil Funds Barbados, and certainly we're going to expand the range of products in that jurisdiction. Our capital markets team was very active in 2023. We raised over $11.4 billion for the financial group. But beyond that, over the years, we have raised over $150 million for businesses, whether it be debt or whether it be equity. Why is that important? Going back to financial well-being. That capital is providing employment. That capital is driving tax revenues. That capital is driving GDP growth. And certainly as it relates to employment, you can understand the impact on the entrepreneur who has received that capital, who is driving his business forward, or persons who are newly employed who can then provide for their families, going back to well-being. Our asset management business, key pillars, our unit trust portfolios, Wealth Barbados, and our private portfolio management. Again, why is asset management is important? Again, going back to financial well-being. And let me just take out one country that we currently serve, Jamaica. There are 3 million Jamaicans. I'm going to say 200,000 Jamaicans have an equity account. Or 200,000 Jamaicans have a product beyond the basic investment product or the basic savings product. So it certainly means that quite a number of Jamaicans are not capitalizing on wealth-creating products. One easy way of persons to get involved is through our unit trust portfolios. So which is why a key pillar for us is ensuring that we have a greater capture of those persons currently not investing in wealth-creating products like our equity fund, our real estate fund, and our bond funds. So you understand that it's a key pillar for the business going forward. In addition to that, it also ensures that for the business, it's recurring revenues, sticky revenues. We want to ensure that going forward, that we're building a more resilient business. Our private equity focus, again, there are two ways to grow your business. You can provide debt or you can provide equity. What's the opportunity? A number of well-run businesses in Jamaica don't need any more debt. They need equity. They have clients, they have systems, etc., 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 but they need some equity. We have seen, based on the model with Home Choice, us coming in, providing equity capital to ensure the business is moving forward. So we're leveraging our various initiatives across the group with the JMEA as one initiative to ensure that we are making contact with businesses and giving them access to equity capital. We're going to hear more about that going forward. And then our self-service platform or client management system. Why is that important? We want to provide an amazing customer experience to our clients. We want to ensure that clients can trade portfolios all across the globe, do transactions all across the globe. We have gone 3 or 4 of our 3 modules so far in our client management system. We're going to build on that. To allow our clients to log on, see their portfolios. We view that as a key pillar of our self-service business going forward, where everything in the future will be on that portal for clients to do transactions in our broker-dealer VM Wealth Management. And then last but certainly not least, talking about our talent. Within the wider VM group and VMIL, we focus on a number of things. Focus on, are we creating the right culture? Are we creating opportunities for our team members? Do we have a robust employee value proposition framework? How do our rewards and recognition compare to the marketplace? And how is our work life? I want to say work-life balance, how is our work life? And I think we score market leading on 3 of those pillars: culture, opportunity, and EVP. But certainly some work to do to drive rewards and work life. Why is it important for us? We do have a novel proprietary system. What we have is people. So we're in the space competing for talent with all the players in the space. We want to ensure that we attract, develop, and retain top-performing team members. That's going to be the future of this business, the revenue streams that we're going to bring on board, the self-service platform we're going to build on board, the new markets that we're going to enter is going to be underpinned by talent. At this point, I'm going to pause. I'm going to hand to Brian Fraser, our Deputy CEO. Can give him a clap.
Thank you, Rez. Good afternoon, everybody. Well, 2023 was a rough year, as Rez mentioned. I lost all the hair on my head before, but as you can see, I lost my beard during 2023 as well. So today, I will briefly take you through the financial performance for 2023, and I will focus more or less on the key revenue drivers of the business. You know, as Rez and the chairman started by looking at the context, they have done a good job outlining the context for our performance. So what I will do is kind of focus on how especially the high interest rate environment would have impacted our business and the various business lines. As Rez said, it was not just VMIL, but the entire industry. So firstly, the high interest rate environment would have negatively impacted our fixed income portfolios and our trading gains. And this was mostly due to depressed bond prices, as Rez mentioned. Our net interest margin, or our spreads, were compressed further, and this was due to the higher cost of funds. If you look at I think it's note 22, you would have seen where the interest costs on our debt obligation increased by about 100%. So that would have, caused our net interest income spreads to narrow. We also would have seen a slowdown in capital markets activities as businesses more or less avoided raising capital in the high interest rate environment. And as Rez mentioned, our asset management would have been impacted. That business was impacted in two ways. Would have seen investors' redemption from our funds increase during the time, and would have also seen a negative impact on our asset prices, and that would have impacted our assets under management. And lastly, would have seen limited activities in the local equities market as investors took advantage of higher returns on money market instruments, therefore leaving the equity market more or less depressed, as we would have seen over the last few years. Notwithstanding the challenges, as our chair and our CEO would have mentioned, the VMIL group would have remained focused on our customers and providing them with the solutions that meet their needs, especially in these volatile markets. At this point, I just want to also acknowledge the hard-working team, VMwell team, for all their efforts in a very difficult 2023. Now, turning to the financial performance, our total revenues generated was approximately 1.9 billion, and a 19% decrease year over year. And I will speak more about the revenues later in the presentation. Our total operating costs stood at about 1.9 billion, increasing by 33% year over year. And this was largely due to an increase in staff costs by about 19% and a over 200% increase in impairment costs. Other operating expenses increased by 7%, which was more or less in line with inflation. Our share of profits from our associates total 164 million, and the resulting net profit after tax was approximately 200 million, and this was a significant decline from the 700 million reported last year. The decrease in net profit as well as the injection of capital that took place last year, would have resulted in a decrease in our return on equity to 6% from 26% the previous year. And, as I mentioned, I want to now take a closer look at the total revenues that we generated, about 1.9 billion, and the composition of that revenue, just to get a better insight into how the business performed last year. So our net interest income decreased from about 250 million last year to just about 50 million this year, in 2023. And as I mentioned before, this was as a result of the increase in the cost of funds due to the higher interest rate. If you look at the graph at the top right-hand corner, you'd see the composition of the revenue. So we are seeing now where net interest income represent only 3% of the total revenues in 2023 versus 11% in 2022. We, however, expect an improvement in net interest income once interest rates start to fall. Looking now at net fees and commission, total net fees and commission was approximately 975 million, and this was a 7% decrease year over year, and this was mainly due to a decrease in our capital markets fees. Our capital markets income are also including the bottom right of the chart, just showing how the main business drivers contributed to total revenue. So the top slide show the overall revenue composition, and then the bottom right show the composition by business line. So our capital markets income came in at about 350 million in 2023, and this was a 34% decrease year over year. So we would have seen whereby the contribution to revenues, total revenues, decreased for that business line. And as I mentioned before, this was based on the decrease in activities in the market due to the current environment. On a positive note, our asset management revenues actually increased by 19% year over year to about 480 million. And this is commendable based on what I mentioned before, how the market conditions are impacting this business line. And also it speaks to the resilience of the asset management business line. And as you would have seen from Rez's presentation, from a strategic perspective, our focus is definitely to grow asset management in the future. Additionally, our equity trading commission income increased 19% year over year to 84 million, which again is commendable based on my previous comment about the market conditions. Overall fees, net fees and commission accounted for a whopping 50% of total revenues in 2023 versus 43% in 2022. And we expect this trend to continue based on the strategic objectives outlined by our CEO. Gains from investment activities were 866 million, and we would have seen an 8% decrease year over year. And this was primarily due to the negative impact that the market would have had on our equity portfolio, as well as a one-off gain that we made from a property swap transaction the previous year. I must highlight the performance of our bond trading income, which continued to show resilience, recording a 9% increase year over year to 676 million. And I would definitely want to commend our trading team and our treasury team for that performance. Overall gains and investments accounted for 46% of total revenues in 2023 versus 24% 41% the previous years. Before I wrap, I just want to quickly touch on two items. Firstly, I want to highlight the two of the strategic investments and their performance in 2023. First of all, KP REIT, which contributed $164 million to our share of profits last year. And they had a very good year. The company recorded net profit of approximately $4 million US. They have acquired new investments in Cayman, and they have disposed of some of their properties in the US and Jamaica at a gain. And, you know, KP REIT has a diversified real estate portfolio, and we definitely expect to see continued positive results and positive contribution from this business line going forward. The second investment would be Carolyn. I believe Rez would have touched on that in terms of they had a pretty good year in terms of increasing their loan book by over 63%, and would have seen expansion in all three markets during the year. And as Rez mentioned, would have exited the investment in Q1 2024 at a gain of over $400 million. The second and the last point that I want to make in terms of the performance is, and I believe our chair would have touched it, is the injection of the $1.5 billion in capital in Vmil last year. This was important for the business last year, but also going forward as we position for the future and for the rebound in the business. The group would have raised over $11 billion, and $1.5 million was allocated to VM Wealth. $300 million of that was to further our private equity business line, while the other $1.2 billion was to enhance the company's revenue generating capacity and to improve our capitalization. As you can see from the right of the slide, the injection would have resulted in an improvement in our regulatory capital ratios over what they were in 2022 and way over what the regulatory requirements are. And this, you know, is a good thing in terms of it improves the financial resilience of the business, especially in these volatile markets. So in a nutshell, the 2023 was a tough year for VMIL. However, we have positioned ourselves and our portfolios, especially with the capital injection late last year, for the recovery in the market conditions, which we expect to improve in late 2024 and into 2025. So at this point, you know, I'll hand over to Alison, and I will be available for questions.
Good afternoon, everyone. All protocols observed. Today I'll be taking you through an overview of our business operations with a focus on our internal controls, digital, and a soft landing on ESG. So at the VM Group, we have what is known as a culture of accountability. And what that means is that we own up when things don't go according to plan. And despite our best efforts, we were not able to release our audited financials on time. That was publicly declared, and we are taking full accountability for it. What we have done is to take a step back to look at some of the reasons why we were not able to meet the required timeline for publishing our audited financials, and we've classified the reasons in three broad categories. One is around our internal systems, so our processes and our technology that we have embedded in our business. They aren't rising to the demanding needs of the audit. The audit is getting a little bit more sophisticated year on year, and that is something that we are taking a keen look at. Additionally, the same resources that are used to manage the audit process are the resources that are used to manage the business. And so, you know, with the complexity of the audits, we have to do a little bit more resource planning, and that is something that we're looking at as well. And further, as Rez, Brian, and our chairman would have mentioned, we're doing quite a number of different types of transactions. We're deepening our footprint in private equity, and each time we increase or expand our business model, we will have additional, bootstraps onto our audit process. So that will take some time. So what have we done? We have first announced to the JSC that we are going to be changing our reporting period for audited financials from a 60-day period to a 90-day period. That will give us sufficient time to better manage the audit process. And then we have put together a comprehensive action plan to address some of the areas that we saw would have needed improvement, and that was done in consultation with our audit partners, but we did a deep dive internally in the business as well. So what should you expect from us? You should expect an improved process going forward, and certainly we're expecting that we'll have an increase in our shareholder confidence. All right, so I mentioned our internal systems. Par for the course for every organization is just a continuous improvement in how they do business. So that's the same for us. We are continuously looking at our business processes and looking at the areas that are manual in nature and applying automation to those. As a matter of fact, this is a part of a continuous improvement process that is undertaken at the group level. And as a part of the group, we are, we've fallen in line, and we are doing our own internal process improvements where we're applying automation where necessary. Depending on the design of a system as well, you can design a system so that you implement it in parts. So what you'll end up having at a given time is some parts digital, some parts manual. What we're doing is connecting those dots to create digital and end-to-end processes within our business. And then finally, we're looking at the capacity within our teams so that we have right talent development, talent management, and talent augmentation where we need more staff. Okay, and all of this is not done in isolation. We are, as a part of a financial group, and we're anchored by our board of directors. The board also has its committees that are put in charge of overseeing the decisions that are taken by the leadership team. So we have our corporate governance committee, we have our audit, risk and conduct review committee, as well as VM group and VM financial group committees that oversees the decisions that are taken by the management team. So why am I presenting this? I'm just sharing with our shareholders that we don't do things in isolation. We're anchored in sound decision making and robust assessments of all the decisions that are taken within the business. And not only is our corporate governance internally to the business very strong, it is recognized externally as the Jamaica Stock Exchange has increased or improved our corporate governance index score, which we're very proud of, from a BB to an A in 2023. So we're very excited about that, because what that demonstrates is that an independent assessor has looked into our business, assessed our business, and have found us to be adequate. And as you can see, we have been improving year on year, so we're very happy about that. Recognition, the chairman would have mentioned the CARICRIS rating or upgrade to BBB. So what that means for investors is that when we go to market, we're looked at as a sound business with good credit rating, and we can access capital at a lower rate. So this is actually a very, very impressive move for us to have that improvement in our CARICRIS rating. And as I mentioned before, and in the chairman's presentation, he mentioned that the JSC had acknowledged us on our corporate governance efforts. So just switching gear a little bit to speak just very briefly about how we serve our clients within the brokerage business. So Rez would have mentioned that digital is the future. Digital is actually here, right? What we intend to do through our digital transformation efforts is to provide accessibility to our clients wherever they are. So they could be in India, they could be in Australia, Timbuktu. They're able to access our products and our services remotely. That is the future of business. So we have our Wealth Edge platform, which is our platform that allows our clients to access, not just our clients, anybody, to access our brokerage services for IPOs, APOs, rights issues, pref shares, bonds, wherever they are. So we no longer have to go to a location to physically sign up a form to access these offerings. Additionally, our client portal allows all our clients to be able to access their portfolio remotely. Coming in 2024, we have something that's very exciting to us, which is an online self-service portal, which means that you can be online and open an account. You don't have to come inside. So that is a tremendous achievement. We're in the final stages of testing that solution, and we expect to have that launch before the end of the third quarter. And then finally, coming up in 2025, which we've already started, we are doing a major upgrade to our investment management system. So why are we doing all of this? If we say the future is business, is digital, and we have to be able to serve our clients in a digital way, we have to be able to collect data, use artificial intelligence. All of this sits on digital platforms. So the focus for us is to digitize our business to provide efficiency in how we do business. And I won't spend a long time on this, but what I want to share with you is from 2020 to 2024, we have been on this evolution. It's a path, and we will continue to evolve our client portal. And just for all our clients who don't know, you can log on to our client portal, access your portfolios, you can pull down your statements, your balances are available there. If you have uninvested funds, we have upgraded the look and feel. You can set financial goals, track those financial goals through your investment portfolio, and we have much more that's coming on stream. All right, and what is something that's very insightful and pleasing to us in the company is that our thesis around the need for digital is being matched by the behaviors of our clients, because we're seeing that the enrollment and transactions are actually growing online. So we're very happy to see that. The JTrader platform is the Jamaica Stock Exchange's platform. It's not ours, and we're seeing our clients growing in numbers in their use of the platform. So it means that digital is here. And then finally, just to give you a sense of what has happened in 2023 on the ESG front, and more of this is on page 23 onwards in the annual report. We spoke a lot about governance just now, but on the environment, just to demonstrate our environmental stewardship, we continue on the Adopt a Hillside program, which is a 3-year program that we partnered with the Forestry Department to through a reforestation program where we're planting trees in Clarendon on a hillside, and this is being led by our manager for business planning and research, who is here, Nicole Adamson. We're very happy that we're able to contribute to that. That's external to the business, but internal to the business, we have been recognized by NEPA, who have issued us with gold and silver awards for good environmental stewardship. So we have been recognized for chemical treatment, water treatment, energy conservation, quite a number of things in the business. So we're very proud that we are able to give back to the environment. And then on the social side, we continue with our financial literacy program by partnering with one of our own employees here within the VM group, who is an author, has written a book, and has undertaken a school tour with her book, Aiden Learns Investment. So that is really capturing the hearts and minds of children and introducing them to the principles of financial literacy at an early age. And then we continue with our partnership with the University of the West Indies through providing mentorship and supporting their entrepreneurial programs. So that concludes my overview of the business operations today. I'll hand back over to Res Burchinson.
Thanks, Alison. So I just want to talk about the future of the business. So obviously we had a very candid conversation regarding the performance of VMIL for 2023. No member of my management team or no member of staff of VMIL certainly is pleased with the performance. But what we do know, based on our experience, is that there are going to be times in our evolution where it's going to be tough times. And 2023 was just one. The markets didn't treat us favorably. We have taken note, and we are committed to creating and building a resilient business. That resilient business is underscored by a robust asset management platform. So you have seen us gone out and made investment in Barbados. That's the first of many moves that we'll make in asset management. We're hoping that in a number of weeks, we'll be able to indicate talent being onboarded to drive that business even further in the various pockets of value that we're seeing. So region expansion is important for us, led out of Barbados. New funds in Barbados. There is obviously a lot of growth available in the diaspora. And I wouldn't call it a real estate development thrust under asset management. What I would say is that we're going to be creating innovative asset management structures going forward. We believe that we have had lots of talk in the business around it. We have to reimagine asset management. Asset management is going to evolve beyond private portfolio management, unit trust, and our mutual fund portfolio. So talent will be important for us. Driving operation efficiency, so I want to stick that in, is also going to be a key pillar for this business. All our digitalization initiatives are to ensure that we're driving operation efficiency. Alison spoke about very candid regarding the audit challenge of 2023. We have to ensure that we look at the lessons that we would have learned and ensure that going forward we mitigate those risks. The self-service platform is important. Alison spoke about the common online onboarding platform, the improvement in our core banking system, and of course, there'll be ongoing improvements to our client management portal. So I would say that there are a number of wins in the business. Just want to reiterate them. Barbados, regional expansion, the improvement in our corporate governance score, lots of wins in the digital space in terms of new platforms and also enrollment in those platforms. And just want to underscore that the capital that we got ensured that all our regulatory ratios improved between 2022 and 2023. So with that, I will pause and hand back to the chairman. Thank you again.
Thank you, Rez and team. Brian, good job. Alison, very good job. I like the way you explain things. I think that's what we need, right? Plain talk, and I like that. So thank you very much. And we stress corporate governance not because it's just the thing to do. We stress corporate governance because it is the area that is going to get us, will save us, in times of danger, and will propel us in times of opportunity without exposing, the sensitive areas. So corporate governance is very, very important. That's why we talk so much about it. And I see everybody getting bigged up. I just saw the director Samuda, the chairman of the corporate governance committee of the board, who just disappeared from the audience. But I will thank him anyway for his efforts. As you see the scores climbing in the JSE, in regards to the JSE, that's a real improvement, and we really think that that's an important driver for the future. So well done, Milton. Thank you. So at this time, we are going to open the floor for comments, discussions, questions on all that you've heard so far. And please feel free to just raise your hand if you're in audience, or put your question in the chat, and that question will be relayed to me, and I will express it here. So this is the discussion section, ladies and gentlemen. Yes, sir. Please identify yourself as you are called on, and go ahead with your question.
Yes, Mr. Chair. Good afternoon to you and your board members and fellow shareholders.
Good afternoon. Mr. Staple. Yes.
White Staple is the name.
Yes, sir.
I would like to say thanks to your board members who professionally did a good job in converting or in getting the company to operate as effectively as they did in 2023. Thank you very much.
Thank you, sir, and thank you on behalf of our directors.
I must thank the auditor for his professional way of expressing to us as shareholders what happened with the numbers. Because, you know, numbers can play tricks with us sometimes. And many often times we use numbers to illustrate a point. But at the same time, we find that in these numbers really backfires on us.
Understood.
Mr. Chair, I thank the members for the kind way they express themselves. Mr. Chair, that lady who made a presentation did a wonderful job.
Alison Mays.
Congratulations to you, ma'am, and God bless you. I would like to say thanks to our CEO, Mr. Redsworth, for the job that he's doing. It's not an easy job. It's very challenging.
So he tells me.
It's very challenging, but he's doing a wonderful job. Mr. Chair, if you turn me to page 101, on the customers, I see that number moving in 2022 from 84,000 to 46,000 in 2023. What accounted for this? Underlying customers.
Underlying customers. Here. These are accounts receivables. And so you will see the subheading under accounts receivables of customers and others. And so there was a doubling in terms of customer receivables. A reduction in customer receivables from 2022 to 2023, almost half.
What accounted for that?
Good governance. I will look at note 10 and see if we can get any more information on that. Just active collections. So that would be outstanding numbers, and so efficiency in the transactions would have reduced that number. That's my opinion on it.
Am I to understand, Mr. Chair, that represents a negative number?
It represents an improvement in the outstanding amounts. So amounts that were outstanding by our customers, that has been halved, which is good news, because you don't want accounts receivables necessarily to linger. So that's a good number.
Do you plan to continue on this track?
Certainly.
Mr. Chair, you mentioned interest rates, and I hear many talks about interest rates. But in a situation like this, where the hurricane has impacted negatively on us as a country, how do you see interest rates impacting on our business in 2024, 2025?
That's a good question. I think that and this is my opinion, and the discussion goes on, but as you encounter shocks to your economic system, it doesn't bode well for lowering interest rates in line with your original schedule. Every time you hit a bump, you can expect that regime of higher interest rates may be prolonged. However, there's also the contrarian view that to aid after a natural disaster, to aid after an economic shock, you want to bring the interest rates down. So I think there's those two natural tensions. Which one will win? I really can't say.
Mr. Chair, we hear a lot of people are saying they have to increase their insurance. How is that going to impact on our business? Increase insurance.
Well, we happen to have shareholding in a general insurance company. So from that perspective, we are there for our customers. Increased costs in insurance are never a good thing. It's a necessary thing, so we can look for increased expenses in that regard, I think, across all businesses, including ours. But we are also positioned to provide that kind of solution to our customers through British Caribbean Insurance Company Limited, of which we own 45% at the group level. So
do you think our members will in effect feel the benefit of this increased insurance?
if the costs go up, yes, certainly. It's something to prepare for.
And how are you preparing your customers for this shock?
Well, we don't know exactly the magnitude or whether there will be increases of that nature. So I think that the natural disaster season is very early. We have to see how those costs flow through the economy first.
Mr. Chair, in previous years, there were a lot of amendments taking place with IFRS and our local company. How is this affecting the future of our financial statements?
Well, let me give our financial controller a chance to answer, or financial folks, on that. Janice, you want to?
Chief Financial Officer. You can.
I think we can turn on our mic. Can we turn on our mic?
Mic is on. Okay, thank you. So, looking in note 35, you'll see mention of prior adjustment, and that's what you're referring to. Oh, could you repeat the question for me, please?
I'm saying that we have made a lot of amendments during the past years.
Yes.
Up to 2023.
Yes.
How is this impacting on our customers?
All right, so that question can be answered in several ways. So we have adopted IFRS. We are fully compliant with our IFRS standards. And with IFRS, we do various things. You have the fair value assets based on the market conditions with increased interest rates. You'll have the value of the assets will fall. So it's not a matter of the adjustments made. It's a matter of applying the relevant IFRS standards to your business operations.
Mr. Chair.
Mr. Staple.
Yes, sir.
I think you've gone about 6. So I know you have others, but I'm going to allow other shareholders to have some questions, and I'll come back to you.
Thank you.
Time allows. Thank you, sir. Okay. Which one is first? In house? Go ahead for me. Your name, sir? Yes.
Arthur Ellison. And what rises in my mind is, why is it we were in breach of the return of assets ratio by the auditor's report of payments on corporate bonds? I mean, can you say why? And
yes.
logically, it's been settled by his report as
right.
well.
Yes.
But why did you were in breach?
Sure.
Obviously,
okay.
we knew a bond was going to come due.
Right. It wasn't that we were in breach of the payment, but let me ask Rez to expound on that for me. You want to do it on your mic?
Okay, so you're referring to page 97, where it speaks to the breach in the ROA and the ICR. So VMIL issue bonds in the local space. I think we have about 3 bonds in the market. Those bonds have covenants that are tested periodically. The test that was done as at December indicated that we're not in compliance. That non-compliance was primarily based on financial performance for Q4 primarily, but we were not in breach, we were non-compliant. It's important to note, though, just want to just redirect it, that the note indicate that we remedied same, so there was no breach beyond that. So it's here as a point of emphasis, but
Yes.
that was remedied in the subsequent period.
But what it was, is it? It was, but there is a question as it says, describes that a group breached the return of assets ratio and interest coverage, or interest coverage ratio for the fixed and variable corporate bonds on issue, resulting in outstanding bonds becoming payable immediately.
Understood. Understood. So how you calculate
If you don't mind my saying it. So obviously you paid it immediately.
No. So we rectified it.
Oh,
so
okay,
if you rectify it, there's no need to pay it. Fundamental, right?
Oh, I understand.
So the ROA is net PAT over assets.
Yes.
So there's a minimum that's required. So we fell below the minimum on the ROA. The interest coverage ratio is EBITDA over interest expense. Again, there was a breach there as at December. So it was important to note that even though we're compliant all throughout the year except December, but we're given time to rectify it, and that was subsequently rectified.
Obviously, that wouldn't affect your carry Chris or any other rating.
Well, let's see what obtains, because we're now in the carry Chris rating season. The carry Chris gets all the financial information, and then they make a determination.
All right.
But carry Chris looks beyond just the bond covenants. So for example, and I made a point to highlight it. In our broker dealer, all our regulatory ratios were improved based on the injection of capital. As the first thing, that capital came from the financial group. So Caracas looks at the strength of the parent, the ability of the parent to support the company. Yeah. So we got capital strength in our regulatory ratios going forward. All right. Thanks.
I'll ask you one other thing. We're becoming a regional organization. What's our view of the Guyana market?
So we have always, want to take a chairman?
No, please.
We have always, the chairman's meeting and So we have always been looking regionally. We have a strategic investments team that is always combing the Caribbean for opportunities for the group, including VM Wealth and VMIL. Yeah. We have had numerous conversations in many other islands. Conversations are ongoing. However, if a transaction may take place, but as at right now, we have no live transactions in Guyana. But we salivate, let me use that word, around the economic prospects of Guyana. I've seen last year there's a report that came out that the size of the economy doubled in Guyana. Yeah. So I imagine that all the local players are lined up to enter Guyana, and VM Wealth, VMIL, VMG, and others are right there. So, we're looking for opportunities. If you know of any, please refer them to us.
All right.
Thanks.
And your carry lend benefits are supposed to increase the dividends that you can look forward to in the future?
Well, you got a dividend.
No, I'm talking about increasing.
Okay, no problem. So thank you very much. So as I said before, we made an investment in Caroland. We made a material gain. We have always, for the past 2 years, been very prudent in capital management. I mean, in previous AGMs, the chairman would have got a number of questions about dividends. Having made a gain in the first quarter, having looked at our financial performance for the first quarter, we decided that, where we are from a regulatory perspective, as I spoke before, that it would be prudent for us to make a declaration. We make 2 declarations typically throughout the year, Q1 and close towards year end. I'm quite sure the group CFO is looking forward to another declaration come Q4.
I'm very glad to know you're trying to raise your shareholders' spirits with those efforts.
So,
thank you.
Rez, just might stay there for the next question. We have one online, and it's from David Rose. And
sure.
It says, VML has a jump in stage 3 provisioning. Just lost my screen. page 151 in the annual report, from 41 million to 721 million. Was this related to iCreate or other loans? Also, how has VMIL sought to reduce risk of bad loans?
All right, thanks. Thanks, David. Thanks for the question. Unfortunately, I can't comment specific to a particular loan, right? That's not the case. I think what's important to note, though, is that just based on the challenge of 2023, all our business lines were impacted. Our loan book was also impacted. We have a corporate loan book, we have a margin loan book, negative impacted. There were increased provisions across the board. What have we done? What we have done is that we have taken a careful look at our credit policy from late last year. The management team looked at it, the VM Group Credit Committee looked at it, the Finance Committee looked at it, the board looked at it, and we believe that the changes that have been made are important changes to mitigate some of the risks that materialize in 2023. That's the first thing. So that's from a policy standpoint. Another thing that we're doing is that we've looked at our balance sheet and we've said, for VMIL and VM Wealth Management, how do we best deploy the limited capital that we do have? And we have said, perhaps we don't want to play much in the corporate loan space. Let's redeploy some of that capital to private equity. So we're no longer promoting our corporate loan product offering, so we're redirecting some of that capital toward private equity. And then also regarding technology, Alison didn't speak to it, but we're in the midst of deploying a solution that will give us some automation, not as much as we'd like. Alison did speak to the fact that many of the things that we do, just like CMS, those things are done on a phase basis. So there's a phase one for a margin loan product, and then on talent, we continue to boost talent. And we rely heavily on internal talent in VM Wealth Management, but talent across the VM group, within VM base and across the wider group. So lots of change that were made, understanding the challenge of 2023.
Sure. Can I add to that to just say that scrutiny and revision in our credit policies is a standard operating procedure for us. We have the board committees set up in a way that we review the risks on an ongoing basis. And if it is that we review our policies on an annual basis as well. And so if it is that we need to respond tactically to changes in the environment, we're able to do that quickly. And this was a situation that Rez alluded to last year. But it is a standard part of our operations to continuously review our policies and continuously work within the policies to understand how that's dealing with our business. So that framework is important as well. A part two from David. VMIL is asking shareholders to approve an increase in the authorized share capital at this AGM. That would be one of the resolutions that we're going to deal with later. Is it that VMIL plans to issue more preference shares shortly to raise more capital? And is the increase for ordinary shares a prelude? I think he means the increase of the authorized, a potential prelude to future equity raises. Rez, you want to take that?
Yeah. Thanks very much, David. So why are we doing what we're doing? This business relies on capital. This business relies on talent. We got capital last year that was injected in the wealth management business. And as I said before, it bolstered all our regulatory ratios, and we're very proud of that. As you look to build a more resilient business, we always have to be looking at raising our capitalization, whether it be through preference shares or ordinary shares. There is no plan at the moment to dilute equity shareholders. Let me repeat, there is no plan at the moment to dilute equity shareholders. However, we want to ensure that if the opportunity were to arise, and we see opportunities across the space to raise capital, that certainly we can issue same via preference shares. Preference shares are a different level of characterization or categorization based on accounting standards. So something that we're exploring. And I'm quite sure by end of Q3, the shareholders will hear more about it. But let me repeat, as at this time, there's no intent to dilute ordinary shareholders. What we're trying to do is to put all the systems in place to ensure that we can raise capital in more efficient ways than normal loan capital. Thanks.
Okay, David has another question. Like Mr. Staple, we're going to pause there and give the opportunity for another member, shareholder, to ask a question. Sir, from in the room.
Pleasant good afternoon, Lancel Bloomfield. Mr. Chairman, page 14, your 7-year statistical review has put the company in an excellent position, but you're falling down badly over the 2023 here. What gives you the impetus and the drive that you will be able to successfully return the profits up to that level of where you were the year before?
Okay, Chair?
Yeah. Well, let me just start before I turn over to Rez by saying you will know that this company, although it is a young company, VM Wealth is substantially older, several decades old, and the group is in excess of 140 years old. So we've seen good times and bad times come and go. The critical element that we take from our history and that we try to live is to plan for both good and bad times, to structure the business in a way that can be resilient in bad times and to take advantage of the opportunities in the good times. We think that that comes from, as I said, the corporate governance structure, the governance structure of the business, the interaction of the board with the management and the teams to ensure that we are doing the right things, doing the fundamentally right things. You know, you cannot predict the future, and that's not our job, but our job is to prepare ourselves for any eventuality, and that's what we're doing. So you will see times that where our performance is not stellar in an absolute sense. Sometimes it won't be stellar in a relative sense, but the rebound is what we're always thinking about. The avoidance of the issues and then the rebound, and that's where we are now. So Rez is the man with the hand on the helm, so he can add to that if you would like.
Yeah, briefly. We're not. So where do we see growth? All right. So we see growth in asset management. Spoke about it before. We see growth in the region. So both are key pillars for us. Another thing that's important for us is the fact that notwithstanding the challenge of 2023, we got capital to make the business more resilient. We see growth in terms of where clients want to go in terms of customer experience, and we're making those investments. So notwithstanding, let's say, a hiccup of 2023, we continue to make investments to capitalize on our future growth in asset management, in talent, and in systems to grow this business.
Okay, accepted. I too, my next question, I too am very pleased on the clarity that Ms. Mays brings to her presentation, including Mr. Burgess.
Oh, as a runner-up.
But I have two issues here.
One, if you can, Mr. Bloomfield, because we're short on time.
I know, they are too short.
Yeah, man. Okay, go ahead for me.
When are you going to fix the Wi-Fi at Vmil? Because it connects to the next issue that I have. That issue has to do with when I place the funds for doing trade, because I have a small account with you. And I place the funds to do the trade, and I take the voucher over to the receptionist. I would stay there and use my phone and do the funds in request to do the trade on JTrader. With your Wi-Fi being broken down, I can't. And however, when it is working, what happened is this. I send in a request and I spend the whole day until the market closes before I get an email to say your fund has been approved. And I have spoken about it and nothing has been done.
Okay, we're going to take that under advisement. We're going to talk to you off the air about that, your particular experience in that regard. I'm hoping that it's just you came on a bad day where the Wi-Fi not working. But the other element, we can examine that a little more closely after the event. Thank you.
And one last thing. What is the policy on your fees concerning VMIL checks?
Checks.
Because I did some transaction recently. I got a check, your check, took it to your bank, and was charged a fee. So I really don't know what is happening.
Okay. Alison will speak to you off the air regarding those two issues, regarding the Wi-Fi issue, the funding issue, right, and the check issue. What I will say though, just briefly regarding the fund out request. So a number of our clients are very disgruntled, I mean, just like yourself, around the time it takes to get a fund out request approved. And we have noted same. One of the things that Alison spoke about in her presentation is that we're crafting a digital plan, right? Because that process simply needs to be automated, because other institutions with fund out request isn't as cumbersome and challenging as VMIL, VM Wealth Management, and we plan to fix it. As I said before, there are many things that we're trying to address as part of our digital strategy. That automation is one. I don't think it's on the high priority item, but it's on the same, and we intend to give it some focus for the next 2 years.
Thank you very much.
Okay, thank you. I'm going to take just two more because we are at 4:48 and we have a bit of business to do in the meantime. Yes, I'm going to take two more, right? So we'll go back to your question. You had an additional question?
Well, I didn't warn you about it, so I won't
Okay, all right. Okay, that's fair. And then we'll go back to the online question, and I have one here. This was not here before. There was a question before. Right, there you go. Yes. Mr. Staple gone though. This question from David Rose. Did VMI have any direct proprietary exposure to Nikon Energy Trinidad Limited? And if yes, what was your exposure and write down of that investment? No.
No. Next question.
Okay, next.
The acquisition value of Republic?
What was the acquisition value of Republic Funds Barbados? What is the plans for growing in the rest of the Caribbean? And how has Barbados, who is asking this question? Because I don't see a name on it, but is it back to David? David and his book of questions. What was the acquisition value of Republic Funds Barbados? What is the plan for growing in the rest of the Caribbean? And how has Barbados segment contributed so far to the VMIL consolidated numbers?
Okay, so I can't speak to the acquisition value of Republic for this meeting. What I will say is that we have some conversations. Let me preface the response like this. We have some conversations that we need to have with the regulators in Barbados. So David has asked a question before, and I said, David, we have plans to grow Barbados, but we have to work with and through the regulator, and we do not want the regulatory agencies in Barbados to pick up a paper and hear a pronouncement from the CEO that we plan to do X or Y or Z without us first having a conversation. It's just the courteous thing to do in a space that we are not au fait with. But we do plan to roll out as many of the products that are currently offered in Jamaica, in Barbados, at the appropriate time, after doing the appropriate business plan, checks for system, checks for talent, etc., appropriate market research. There are conversations that are taking place daily regarding those opportunities, but we have to ensure that we respect the regulator and don't offend the regulator in any way, shape, or form. Thanks.
All right. Courtney?
The last part of that question, just to confirm that the last part of the question had to do with whether the Barbados operations are reflected in the VML
What's the
consolidated
impact?
numbers.
What's the impact? Yes.
And it was concluded this year, so the answer is there's no
Would mean
impact.
the 2023 numbers.
Right.
Correct.
Yeah.
You're not see it in 2024.
So it would not be in the 2023 numbers, but you will see it in the 2024 numbers.
Correct, thanks.
Okay, thank you. Is that it? I think we can move over to the rest of the business. If I can find my copy. Thank you very much, everybody, for those rigorous questions and strident discussion. We appreciate it more than you know. It gives us good feedback, and we like the engagement from our shareholders. Right? So thank you very much, and keep the questions coming even after the meeting. So on to the business of the annual general meeting, and the next resolution is a motion for the approval of the annual report and the financial statements for the year ended 31 December 2023 and the director's report. So may I ask one to move for that? Yes, sir? Yes, sir. And another shareholder to second? Mr. Bloomfield, thank you very much. The online voting instructions will appear on screens for voting. We will allow 1 minute for voting to be completed and then announce the results. In the interim, we will ask of the shareholders in the room, and the shareholders in the room only, all in favor of accepting the reports? Aye. Any against? Any abstentions? So I can tell you that in the room, the ayes have it, but we'll await the online voting results, which should be in about 58 seconds. I like your timing. I like your timing. Thank you. Great. We had a discussion about the. I think my mic is on. Hold on. My mic is on. Okay, for resolution number 1, motion for the approval of auditor's reports and the financial statements for the year ended 31 December 2023. We have 35 in favor, 100% in favor, 0 against, 0 abstentions. Thank you very much. The motion carries. The next resolution is for consideration of the directors and the following directors retire pursuant to Article 108 of the Articles of Incorporation, who being eligible offer themselves for re-election. A, Mrs. Sandra Shirley Osley. B, Mr. Noel Hahn. And C, Mr. Philip Silvero. I therefore propose a resolution for the re-election of directors en bloc and ask a shareholder to approve the motion. Seconding, since I moved it. Yes. Do I need a seconder, or I moved it, right? Second, Courtney seconds. Okay. So again, the online voting instructions will appear on screens for voting. We'll allow 1 minute for voting to be completed and then announce the results. In the interim, within this room, I'll ask, all in favor? Aye. Any against? Any abstentions? In the room, the ayes have it. Resolution number 2, the election of directors pursuant to Article 108. We have 34 votes in favor, 97.1, and 1 against. So the ayes have it. Thank you very much. The motion carries. Resolution number 3, for consideration at this time, is directors' remuneration. Sorry? I did that already. For consideration at this time is director's remuneration. The amount of $27,312,000 included in the audited accounts of the company for the year ended 31 December 2023 as remuneration for their services as directors be and is hereby approved. May I ask a shareholder to approve the resolution presented? Mr. Bloomfield, moving. Seconded. You have to. Debbie Dunkley. Writing it down. As seconder. And so again, the online instructions will appear on screens for voting. We'll allow 1 minute. And in the interim, I'll ask, all in favor? Aye. Aye. Any against? Any abstentions? The ayes have it in the room. What do you think? So for resolution number 3, director's remuneration, 35 votes in favor, 100%, and 0 against. Allow me to go back to resolution number 2, because number 2 had 2 parts, like a 2-part exam question, and we completely missed the second part. It's coming up back on board. So the first part of the resolution was to adopt an en bloc approach, which we voted for. The second part of the resolution, which I will ask for now, is to actually re-elect the directors. So the first part was just to approve the en bloc approach, and this now is the second part, which is the actual resolution for the re-election of the following directors: Mrs. Sandra Shirley Oxley, Mr. Noel Han, and Mr. Philip Silvero. So again, we have to ask you to, that'll come back up on the online vote, please. Thank you. And then I will ask, Courtney Campbell moves, Arthur Ellison seconds, and all in favor? Aye. Aye. Any against? Any abstentions? We wait for the online vote, but for the interim in the room, the ayes have it. I like that, shareholders. Thank you very much. In favor, 35 votes. It's unanimous. The directors are re-elected. Thank you very much. We move on to resolution number 4, and this is for the appointment of auditors. KPMG as auditors, having signified their willingness to continue in office as auditors, are hereby reappointed auditors of the company to hold office until the next annual general meeting at a remuneration to be agreed with the directors. May I have a motion for the approval for the appointment of KPMG as auditors at a remuneration to be agreed with the directors? Mr. Bloomfield, thank you. Seconding? Sir Williams, thank you. Look out for the online voting instructions, and you have 1 minute. I would love if you could beat the previous record of 30 seconds. Let's try for that. But in the interim, all in favor? Aye. Aye. Any against? Any abstentions? The ayes have it in the room. Based on the nature of the question and the length of the report. And we have a result. In East Rural St. Andrew. No, sorry. Wrong result. In favor, we have 34 votes, and it's unanimous. Thank you. KPMG are returned as auditors for another year. For consideration is an item of special business, and you'd have heard us allude to it earlier. The resolution is, whereas the authorized share capital of the company at the date of adoption of this resolution is 6,188,019,600, of which 1,500,025,000 and 12 million shares have been issued as ordinary shares and preference shares, respectively. Be it now resolved that the authorized share capital of the company be increased to an unlimited amount of shares, and that directors be and are hereby authorized to issue from time to time such number of shares as preference shares, and to determine as they shall deem fit, the rights, privileges, conditions, and stipulations to be attached to each and any such class of preference shares without further reference to the members in general meetings. It's a mouthful. Everybody have that? It's on the screen. I don't know if it's on the online screen. Yes? Okay. Give a minute for you to digest it. So, may I ask for a shareholder to move the resolution? Mr. Bloomfield, seconding. Rez, seconds.
May I ask a question?
Certainly.
We talk about future preference shares. What's the, is there a problem in asking for rights or something like that? Rights or anything?
No.
We talk about increasing the shareholding, or rather the share capital by preference. But how about rights for the ordinary shares or?
Well, right. So this resolution only speaks to preference shares.
Yes, well, that's what I was wondering.
So.
Why preference only and not ordinary?
We're not interested in what is authorized, though. We're not at the point of issues.
Right. So the idea is you have a certain number of shares that you can use in an issue.
Yes.
And so what we're asking for is to increase that limit so that if we need to use more in preference shares specifically, if we need to use more, then we have the authority to use more. So if we're in the middle of the year and we believe that preference shares are a good thing to get capital into the business, we can issue it. And those, when we say rights and privileges, it's the terms of the preference shares. So is it 10%? Is it for 4? Is it redeemable? Those kinds of conditions, those are really the rights and privileges of the preference shares. So it doesn't impact the rights of the ordinary shareholder or the shares that you presently hold. It doesn't impact them at all.
I thought so.
Yes.
But I did wonder whether you might want to increase the shareholding that you're speaking about here by or more ordinary shares. After all, you've authorized already, what is it, 1.5 billion.
That's what's issued.
Yeah, 1.5 billion
Right.
ordinary. Yeah. But there seems to be only 6 billion already issued.
So we're not, no, these are authorized. So what we mean is that those are the shares that we have the availability to issue. But we're not issuing shares. We're not approving an issuance of shares at this point.
Oh, yeah, you're saying that?
We just want to have, so it's, we want to have a pool from which we can issue. So if we were going to issue more, we'd of course announce it. We'd announce that we're having a preference share issue.
Well, that's what I was wondering.
Right.
Would you say that we already have a billion ordinary issued?
No.
And you'd like to get rights for some of the other?
No, we have 6 billion.
Yes, of 12 billion. What is it? 6 billion. 1.5 billion. Oh, yeah.
Right.
Have it a little bit.
Right.
No,
But I understand what you're asking. And I think at this time, we're not trying to do that. We're not trying to get that. We're just speaking specifically to preference. Because, of course...
Would there be a benefit to issue more rights? Or issue more ordinary by rights?
Well, certainly if at the time we felt that there was a huge opportunity for the shareholders, then we'd come to them. Right? We'd want to be able to come to them and ask them. We wouldn't necessarily just do it in as broad as that. So this is specifically for preference shares. Okay? Any other questions? Okay. All right. So could I have a motion to adopt? Could I have a motion to adopt the resolution? It was seconded. Okay. Thank you. And all in favor? Aye. Aye. Any against? Any abstentions? The ayes have it in the room. And we'll now await the online voting, which should appear on your screens. And you have a minute. And we have a unanimous approval of that resolution. Thank you very much. It's 100% approved. So the motion carries. Thank you again. So, ladies and gentlemen, we're now in the any other business of the evening. And if there is any other business, now would be the time to raise it. We have no other business. And if there's no other business from the floor, ladies and gentlemen, we've addressed all the items on the agenda. And so I therefore move for the termination of this annual general meeting of VM Investments Limited? So moved. Seconded. Meeting is hereby terminated. Thank you very much for your attendance, everybody. Okay. Right.
VM, our journey is the journey of our people. We've come a long way together. Our wins are our people's wins. Our change is our people's change. Our move